Eric Muadid, Muadid.com. Let's take a look at symmetry and also what I call uniformity. It's pretty much the same thing. What we are going to be looking at is the idea to be on the lookout for symmetry when we notice it on the indicators. And the lesson here is that whenever you see the indicators give some type of symmetry, chances are this is because something is taking place and it is an actionable event. For example, let's take a look at some charts here. Again, the key here is always be on the lookout for symmetry on your indicators, more so on the RSI and even on the MACD. So we're looking out for areas where the RSI shows a symmetry or the MACDs show a symmetry, because that tends to be something that tends to move markets. And I'll take a look at some examples and setups. So let's take a look at those. Let's begin by taking a look at the NASDAQ on the daily chart. A couple of observations is, so we are seeking to use the market's own behavior to tell us what a stock can or might do. And if we take a look at this chart for the NASDAQ, we can see that the high on hindsight is here. Okay, that's a fact. We can't argue about that. But I want to take a look at what happened here. If we draw a line right there, maybe slightly lower. Let me redraw that line. I'm going to draw it right there at about 61.8. Even if it was just a line, an arbitrary line, but I want to show you what happened at the high so we can understand symmetry. Here's a perfect example here. At the high, you can see that the market went above 61.8 and back below it with uniform action. So that action there gave us a high. So even without going into deep explanations as to why this is the case, that the market made a high, we can see that the symmetry event was critical for the market. Even here, we touched that level and pull back. You can even say this was some type of short-term high at the time. Uniform activity above that level and back below it for the highs there. Now, take a look at the exact opposite. And what I'm gonna do here is take a look at this low right there. This low, now there's another level that we always watch. So watch how this chart is responding to 30.90. You got perfect V-type uniform action below 30.90 and back above it. So your entry was somewhere here and you had a slight move in the stock. All right. You have another situation here where the NASDAQ touched 30.90 and immediately bounced. So that's another instant of uniform action for a re-entry in the market there. And that was good enough to move the market higher. So we are seeing lots of instances of that type of action. And let's take a look here at the MACDs as an example. In fact, I want to take a look at this high, which is during this period here. At the high, right? So we know that the high took place there and the MACD, the RSI gave us uniform activity there. Take a look at what the MACD did at the time. As an example here, so we're talking about this period here, you can see that the MACD also went above 0 and back below 0 with uniform action. So this period here was uniform action and the market would eventually make a high. It's the current high on the NASDAQ. So we have to start respecting more and more the more we see uniform action. So at the recent highs, at these highs here on the NASDAQ coming into 2016, we will see that that corresponds nicely with the high there, or that movement above 0 on the MACD and back below 0. Whenever you notice that your MACDs are showing that type of uniform action where you go either above or below, whichever direction the uniform activity is taking place, it tends to give you a signal. So once we went above 0 and back below it with uniform action, we should have expected the market to pull back, which is exactly what happened. And here we can see uniform activity rejection at the 0 line. Now all these are subtle things that once you become sensitive to, can help you make some decisions. Let's say you wanted to buy the market, but you observed that the market here was showing uniform activity rejection above zero and back below it, and also here. If you were just looking to buy, then definitely that would have given you pause, and so that would have helped you stay out of going long the market. In fact, should have given you some emphasis to have at least shorted the market. Now, if we go and take a look at the NASDAQ weekly chart as per the previous video, I want to go back to that 5-year weekly because it gives us this idea and a tremendous look at the market in such a way that would be missing. Now, I have to point out here that I struggled in the early years because sometimes you do an analysis on the market and the market would go against you, and it was very difficult to figure out what happened until I came across this uniformity method. Okay, so this method that I call the uniformity method really helps explain some of the timing mistakes I was making back in the day. And once I figured this out, and I can assure I remember exactly where the idea dawned on me. I believe I'd made a bad trade at the time, probably about 2008, on SWF, I think. Was that the ETF, bear ETFs for the financial space? Bad timing error, and I could never figure out what happened. It was breaking out. The price was giving me a buy signal, but went back and checked, and I finally figured out where the mistake was. And I was laying in bed. I had the charts printed out. I had a pencil and a ruler, and just studying the charts for hours, trying to figure out where in the world I had made a mistake. And so that gave birth to this method I call the uniformity method. Went back and checked all the timing mistakes or successes at the time that the market was giving us, and I realized had we been using the uniformity method, things would have been much clearer in terms of timing. So right now I am very aware that most people in the market are definitely playing the market short, and as such they should. I don't see any problem with that, right? Because if the market is breaking down to fresh weekly lows, you have to play the market short. But as I discussed yesterday, if we use our uniformity method, and our uniformity method always goes back to, you have to find where a move began or ended. In other words, so right now we are looking to see where the market could bounce. And so what we do is, you can see that this was the low right here in 2011. So figure out what the RSI, where the RSI moved out of a range. So you gotta figure out where the RSI moved out of a range, and here just follow the lines down. And it's a science in a way. So you can draw it. I'm gonna draw it. You can draw it right there. And so once the RSI jumped above that range, you can see that the market went on a major run. Eventually the NASDAQ would make an all-time high. So that was a major low, we can say that, right? Major multi-year low. And so we know that the RSI gave us a buy signal at that movement. So that exact point can be used in the future, and this is a nice example of how this played out. Now keep in mind, I was aware of all this during this period. And so some of the bounces in the market over the last 3-4 years have been pretty much easy to spot. And you can see here uniform activity bounce. That's why I'm saying the uniform activity. Now that this entry here generated the green line, every time we get uniform activity bounce, this is why I'm talking about the symmetry, you get a nice low. Double bottom uniform activity bounce, a nice low. Perfect V-type formation bounce on the line, perfect low. You kiss that line, mwah, perfect low. Uniform activity bounce on the line, perfect low. And here you can see that this is a little bit of a confusing, but it is at the end of the day uniform activity because it looks like this. So let's draw that. It looks this way in my opinion. double bottom, something like that, and then it comes back and does this. So you can see in each instant they are all uniform activity. So you still consider that as a uniform activity during this bounce, uniform activity here, and here uniform activity. So I'm talking about this period right there. So yes, that was also a bounce territory, and the market did bounce for a couple of weeks, as you can see, moving from here to the current highs of late 2015. So of course right now I am very sensitive, and that's why I was discussing this in the previous video. I am personally very sensitive to the idea that if this line holds, you have to consider the idea that the market could bounce. This line has been very instrumental in telegraphing major short-term lows in the market. If you use this line to go long, you really had no choice. You really were forced or put yourself in a situation where you had to have made some profit if you went long. So that's one line, and remember I also drew a line connecting the lows like that. And whenever you see this, now you have to remember, so let me clear that. You have to remember something I think that needs to be stressed here. The market is drawing the lines, or the market is responding to its own lines. The market is responding to its own behavior. And if this can also hold, so there's another reason why to watch this, because if this holds, then there you have it. You have to at least consider the bounce. And again, it goes back to the idea of uniform action. Now I want to show you some examples on this chart that show that the uniform bounce. So let's take a look at this line here, and we're gonna look at the MACDs, and the MACDs are gonna be confirming during the lows. So let's take a look at the MACDs. Uniform action is what we are looking for. So during this period, the market has been giving us buy signals. So let's take a look at this entry here. You can see that here we went below zero and back above it. It's not ideal in terms of uniform action, but close enough. So that corresponds with the low here. Take a look at this support here on the line. MACDs went below zero and back above it with uniform action. So that's a buy signal. Take a look at this uniform action here on the MACDs. That looks like a V, corresponds with that action there. And also take a look at this area here. This looks like another V-type formation. Uniform action below zero and back above it for this low. And even this is not ideal, but close enough for the lows there. So we can see that the MACDs did bounce. And even here I can see that this low here in 2012 corresponds with the MACD on the main MACD holding above zero. And the fact that it held above zero, we can call that also uniform activity bounce. So there is another example of a market using that symmetry. And whenever you observe symmetry, it definitely means something. So let's take a look at the current market right now, because there's some things taking place that I think in my opinion, telling me to be on the lookout for a bounce. We draw a line right there for the VIX, and you can see that if you are trading this instrument without knowing what it is or what it does or what it means, you can see that every time there's uniform action, it leads to the VIX pulling back, and a pullback in the VIX is generally a buy signal for the market. On this line so happens to be again at about 61.8 or slightly under 61.8. In fact, it's a little bit below that, but that's okay. What we are looking at here is uniform action, resistance on the line. You sell the VIX by the market. Uniform activity above the green line and back below it. You gotta sell the VIX by the market. Uniform activity resistance there. For that week, sell the VIX by the market. Double bottom, double top resistance on the line. Sell the VIX by the market. Resistance on the VIX by the general market. This was not uniform action, but eventually it comes here and touches the green line with uniform action. That's a short-term high. Definitely the market was a buy at that point. And now we are looking at two instances, resistance here and again resistance here for the highs there. Using this chart, you have to assume that right now the market is more and more saying that it is looking to move lower, or the VIX is looking to go lower and the market is looking to go higher. We also noticed that on the VIX, it failed to break out above the recent 2015 weekly highs. Okay, take a look at the daily for the VIX. Remember, on this video we are just looking for nothing but symmetrical action. Just to give us an idea, market is already complex, and so we're trying to simplify this. And if we take a look at here, draw a line here at about 61.8, and eventually we'll go into how to draw these lines. But the lines usually can be drawn if you go and figure out where the break took place. Like here, the break took place somewhere here. This break in September was off the highs there. We haven't been back there since. And it's clear to see that every time we show resistance on this blue line with uniform action, the key is a uniform action. It's a sell signal for this instrument, buy signal for the market. Here, uniform resistance, sell signal for the VIX. Uniform rejection, sell signal for the VIX. So what I'm getting at here is, using that analysis and using symmetry, there is a chance that this market is trying to trick people to go short before it bounces. So we have to watch for evidence. And the way we know that this is actually playing out is, for example, take a look at the NASDAQ again, because I believe the NASDAQ is the first of the major averages that I'm looking at that might show that type of action. Here, if we take a look at the weekly again, we see that even if you come back to this lows here before they move to here, you see that the market had moved above this area. So we can use the market's own behavior of the lows of September from here to here, draw a line from there, simple line like that. And so we have to be sensitive, because if this market can move back above the green line with uniform action, this might be a bounce territory. Now, sometimes it is the best thing you can do in doing your analysis is go backwards, because a good line or a legitimate line should make sense. For example, if this is the now, a good trend line should make sense going into the future, and also if you go back into the past. A good trend line would make sense in either direction. So just again, a good trend line makes sense in either direction, and so you need to test your line. So if we take this green line that was generated in September and go backwards like that, we can see that it gives us support here on backwards testing for the lows there. So this line is legit, and it is also legit because it was closed here and for the lows there in 2014. So this line is legit, and the way you know that your line is legit if it makes sense going backwards and going forwards. All right, let me give you another example. Let's take a look at the S&P 500 hourly chart. And so pardon me here because this is a little bit busy, but I want to show you how symmetry works, or extending your lines. We take a look at this break. This break recently is what began the drop in 2016. This break here began this drop, and if we extend the same line, again, remember, we are looking for nothing but symmetry in this video. You can see that symmetrical rejection, or the back test there on this hourly chart, gave you a short-term resistance there, and the market has been down since. Over the last couple of hours, the market has come there, hit that same line with uniform activity, and is showing rejection. So if you wanted to go long this market, you can use this blue line, and if you want to go long, you have to wait for the market to finally clear that resistance, because this is where the market is showing resistance and has been failing. So put another way, let me show this another way, and so bear with me because I can do this another way. Is if we take a look at this break point, this line broke down somewhere there, In fact, let me do this. Let's take a look at a fresh S&P 500 hourly chart. Let's go to the hourly. All right, this is gonna make a little bit more sense now. Let's take a look at the break line. So we've seen that resistance that gave us this recent pullbacks of recent highs. Now remember, if this was taking place on a monthly chart, it would be good for the next couple of months. In other words, the direction would be confirmed for the next couple of months. And if it is on an hourly chart, then it's good it has been good for the last couple of hours. This is why the market is off the highs of the last 3-4 hours. Okay, now let's take a look at another angle of taking a look at this, and it is to go back and figure out where the market broke down recently, which is somewhere around there. And what I've done here, essentially I've just connected the lows here. Now remember, this is all arbitrary. You can adjust this line slightly from time to time, but what I'm going to do is I'm going to find out another line you can watch for the market to clear. So that break point, you can draw that line something like that, and you can see here the break for that gap down break, uniform activity resistance here for the highs there, uniform activity rejection here for the highs today. So we got two lines. So the market needs to clear this red line also. So let me take that off and I'll show you the two lines. So you can use this uniform action to give you two lines that the market needs to clear, or if you want to get out of some short position. First line is the backtest line, okay, which has been resistance here and again there. The second one is the line we just drew, which is here. And the market has been responding to those two lines with uniform activity. Because the market is responding to those two lines with uniform activity, you know that the line is legit, okay? And so we have to wait for the market to move above that level or those two lines before we can even consider the bounce. So even though the weekly chart might show support, we need the hourly to confirm that. Now let's take a look at the MACDs, and we are going to go back to our uniformity action. Off the highs here, and you can see that. So let's go back a little bit higher. And so off the highs here, take a look at what the MACD did. There was uniform rejection. Right now we are looking at uniform rejection again at the MACD, which might explain why we came off the highs there. So if the market is to move higher also, it needs to recapture back above zero and negate this uniform activity rejection above zero. So I guess what I'm trying to say is that you have to combine the dance that is taking place between all these time frames, and this is the rub. This is the challenge. This is where you have to eventually continue studying this thing, because we have to look at what's going on monthly charts, figure out whether there's any symmetry, any bounce. We have to look at what the weekly charts are doing, and then also look at the dailies. Go to your hourlies and see what's going on. And in fact, because the VIX is elevated, and keep in mind we had discussed this earlier, because the VIX is above 20, we have to, if you're playing this market on a smaller time frame, if you're not playing this market on a smaller time frame, it really doesn't matter. But since the VIX is trading above 20 and trading in the 20s, we still have to look at the small time frame if you want to make short-term decisions. And because the VIX is elevated, you can see that if you draw a line off the break here, so this break line, once we broke through there, we can see what happened. We broke through here, the market pulled off the highs there in sometime late 2015, excuse me. So December 2015, the market came off this level and has been down since then, right? So we know that that subtle break right there was critical over the last couple of weeks, and so we draw a line there, and it just so happens again that this is around 61.8, and you'll see this taking place in many charts. This numbers, this 61.8 number, 30.9 will show up a lot, and then also 61.8 will show up, and of course these two numbers are interchangeable. and also 38.2 is definitely interchangeable with 61.8. All these numbers are interchangeable. All these numbers are pretty much coming off this Fibonacci constant of 1.618. So all these numbers, all of them here, is derived from 1.618. This one derived from 618. Definitely, actually, this I meant to write 69.1. Right? 30.9 is inverse of 61.9. And we can see that 38.2 also is derived from 1.618, which is the Fibonacci constant, or what they call God's number or universal law number, or most commonly referred to as phi. So all these numbers come from phi. So we can see that since then, once we broke through here and at about 61.8, we've been seeing uniform action there. So let's clear that off. So uniform action, so let's follow this. You use your RSI to tell you where the break took place, right there, and it's just a short-term break. And we can see that should the market ever come back to that line with uniform action rejection, you have to assume it means something. Remember, the market is doing the uniform action, and since the market is doing it, it means something. And here we can see that it corresponds with short-term highs. Resistance there, short-term high, uniform activity rejection of the line, short-term high, uniform activity double top rejection, short-term high. And remember, sometimes it's not like you have to be a little bit creative. This double top here, so we would explain that double top looks something like this. It's something like this, right? This here is what this is, and either way it is still double top rejection at 61.8. And then recently, over the last day or so, in fact today, we can see that it's done the same thing. Two uniform activity rejections, in other words, almost seems similar to this also. So that's rejection. That's why we came off the highs. And so you can see that we continue seeing uniform activity taking place in other aspects. Because I don't want to keep this video too long, I want to take a look at, just in conclusion here, a couple of things. Take a look at Facebook, and you want to see how simple your analysis can be sometimes. Take a look at this support at the 50 level, 50 RSI level on the weekly chart, support at the 50 level, support in the price. Double bottom support on the 50 level, you got lows there. Double bottom support here, you got the lows there. Support there, you got the lows there on a weekly closing basis. And right now we are seeing a bounce on a weekly closing basis. So you see this in a couple of major charts, and that suggests that if this can continue holding, this is where you want to go long some of these stocks if you want to play the short-term trade, or if you want to hold them for a while to see whether the market moves higher. Okay, before I conclude the video, I just want to take a look at one more uniformity idea, and this is using trend lines on the RSI to give you nice bounce areas. What I'm gonna do here, you've probably seen me do this before, but this is the Dow daily, and take a look at what happens here after we break out. So we break out above this declining RSI resistance line, so off the highs there, connecting the high there, and also this high there. Once we moved above that range, the Dow had a nice short-term move. You had to have been long during that period, or at least finding breakouts, because the market responded very well. Now I want to show you how uniformity works, because uniformity comes in many aspects. The key is to be on the lookout for it. If we extend this line, we can see that every time the market hit that line with uniform action and bounced with support on the line with uniform action, the Dow had a multi-day rally. We came here again the same thing happened. There was support in the price at the time, and then here this double bottom during these lows here, and the market had a multi-day rally. So we're discussing symmetry, right? And you can see that at some point, once we broke through that blue line, the market fell over the last couple of days. So the uniformity principle, which I was aware and which subscribers were aware of, we were watching this line for support, but once the market broke through that line and there was no support, we have not been surprised by this drop. So it goes back to that idea. Just watch all these uniformity things taking place, because as you consider these things, they eventually tell you what's going on in the market. Now, so what happened here is there was a wedge that was forming on the Dow at the time that looked like that. Eventually, of course, we can see here we broke down. Okay, now I want to show you what was going on on the MACDs. The MACDs, again, as we've seen, had uniform activity above zero and back below it, which is key. So that was a sell signal there when the Dow was showing rejection there, and the main MACD was also showing rejection at zero. So we'll continue deeper into this symmetry aspect, but the key is every time you see your RSIs or your MACDs showing you any type of symmetry or uniformity, you generally tells you that there's a turn point taking place. So alright, I'm gonna stop right there and I'll follow up on this video as we go along. Eric Muathe, themother.com. As always, good luck, peace, and blessings. E-A-C-S, and so it is. Bye bye.